Hello friends, a very warm welcome to my channel. The data center industry is one of the fastest growing industries in India. For the last couple of years, this sector is in limelight and investors are looking for stocks to play this theme. One such stock is Anant Raj Ltd. But this is not something which is newly discovered. Most of the investors present in the market know about this company and the stock has given massive rally and created huge amount of wealth for investors who had invested in the stock a couple of years before. But recently, the stock gave a sharp correction, which gives us an opportunity to reevaluate whether it is good for investment again. So, if you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. Here is a small disclaimer as per SEBI regulations. You can pause the video and read it. This will be the flow of our discussion today. We'll discuss the business model of Anant Raj first. Then we'll look at the stock performance in the last 3-4 years. We'll understand the financial performance in the last 5 years. We'll understand why the stock has given a sharp correction from the top. We'll discuss the outlook of the management going forward. We'll talk about the valuations, the risks, and then form an overall view on the company. Before we talk specifically of Anant Raj Ltd, let's understand what happened in the demerger of this company a few years before. So this company primarily was into the real estate business, and a few years before it got demerged into two entities. The first entity was called Anant Raj Ltd and the second was called TAK Ltd. So both of these entities continued the real estate business but in different geographies. So Anant Raj Ltd did real estate post the demerger mainly in the outskirts of Delhi and the neighboring states, whereas TAK is doing real estate business in the heart of Delhi, that is South and Central Delhi. On top of it, Anant Raj Ltd started the data center business and now it is scaling up massively. When we talk about the land bank, Anant Raj Ltd has a land bank of more than 320 acres and TAK has land bank in the prime localities of Delhi. Now let's come specifically to Anant Raj Ltd, which is our main company for this video. So this company is into the real estate business for more than 4 decades and they have presence in 4 states. They have so far made 2663 affordable housing units. And when it comes to their data center business, they started this in 2021 with the co-location model. And in 2024, they have also started the cloud services. As of now, there is 28 megawatts capacity, which is operational. Mainly, this company gets its revenue in 2 forms. One is by constructing and selling different projects. And secondly is their annuity income. Annuity income is something which comes regularly for a longer period of time. So in their construction and sale business, they are making housing projects, various residential projects like flats, independent houses, different floors and selling them and getting the revenue. The second model, which is annuity revenue, they are making commercial complexes, IT parks, hotels, malls, and they are renting these spaces out for a long period of time. In the annuity model itself, which is the second model, they also have the data center business now, which is again a recurring revenue model. Although they have started the data center business, but primarily more than 90% of the business still comes from the real estate. But going forward in the future, the data center business will scale so fast that the real estate business will look smaller in the longer run. Now let's specifically talk about the data center business, which is the most interesting part of their business. And that's the reason why all the investors are looking at this company, not for the real estate business. So there are 2 models in which this company works. One is co-location and the second one is the cloud services. In co-location, what happens? The company builds the infrastructure, they build the data center, they put the racks, they provide all the electricity, cooling and all the infrastructure facilities. But the client gets its own server, its own software, puts it in the data center and uses it. In the cloud services, what happens? The server, the software and all the tech support is also provided by Anant Raj itself. So the client buys some space in their cloud and as and when the client wants, it is able to scale that particular space. So generally, the cloud services model is paid in the subscription model and there is no upfront cost for the clients. That is the advantage. But whereas in the co-location model, they buy their own infrastructure and server and they put it in the data center managed by Anant Raj. So there is upfront cost in terms of capex for the client. And in co-location, they have limited capacity as equivalent to what they have installed in their data center. Whereas in the cloud services, the client has the flexibility to scale the capacity or reduce the capacity as and when they want. So this is a very simple difference between co-location and cloud services model. This is very important for you to understand the business of this company and track it going forward because the revenue and profits in both these models differ drastically. Right now, the company has a capacity of 28 megawatts totally. And out of this, just 0.5 megawatts is from cloud services and the rest 27.5 is from the co-location model. When we talk about the location, they have presence in Manesar, Panchkula, and now there are new places also coming up. So this may sound too technical, so I am trying to put some numbers to give you an understanding of the size of the business right now, which the company has. So for a co-location model, per megawatt, the company may earn a revenue of about 1 crore per month. And for cloud services, it is nearly 10 times, which is 10 crores per megawatt per month. So these are just ballpark numbers which I am taking for our easy understanding. These may differ based on different technologies, based on different periods of time, based on different services which the client wants. So this is just a ballpark calculation for our easy understanding. So for a co-location model, right now the company has about 27.5 megawatt capacity. So this multiplied by 1 crore per month will give you around 330 crores of revenue. This is the peak revenue which the company can get at the present capacity of 27.5 megawatts. Coming to the cloud model, it is at 0.5 megawatts. This generates about 10 crore per month revenue. So in this model, which is the cloud services, the company at present can get about 60 crores revenue. So roughly you can assume that overall 400 crores revenue is the peak revenue which the company can get in their present capacity from their data center business right now. These are just ballpark numbers for our easy understanding. So Anant Raj primarily was a real estate company. How will they get the knowledge and technology to manage data centers? So for this, they have tied up with a company called Orange Business Services, which is their technology partner in their data center business, specifically the cloud business. Because up till co-location, Anant Raj can more or less manage by themselves. So in their cloud, they need software, they need technology support, they need complex hardware and connectivity features. So all this is brought in by Orange Business Services. So they started with co-location, which is infrastructure as a service. Going forward, they will move to PaaS or SaaS, which is platform as a service, which is more of a cloud services model. Other than this, they have also some partnership with companies like RailTel, TCIL, CDSIL for them to grow their business in India rapidly. If you look at the stock performance, the stock was in a consolidation phase pre-COVID for a very long time. Until then, they were doing the real estate business. But when they started the data center business post demerger, the stock gave a massive rally up to nearly 950 rupees. But at one point of time at 950, the market had discounted the future growth of the company for many, many years. So then there was a sharp correction and the stock made a bottom near 370 to 380 kind of a level. And right now it is consolidating at somewhere around the 500 range. In the recent round in 2025, the promoters themselves invested in a pref round, converted their warrants at 730 rupees, which shows the confidence of the promoters in their own business. Now let's look at the financial performance. The revenue has grown massively, nearly 10 times in the last 5 years from 250 crores to 2000 crores. This is at a CAGR of nearly 50% in the last 5 years, which is very impressive. EBITDA has grown faster from 35 crores in FY21 to 492 crores in FY25. This is because of the margin expansion which we have seen from 14% EBITDA to nearly 24% EBITDA in FY25. Going forward, when the cloud services becomes a larger part of their business, it is possible that this EBITDA can further expand. As it's more of a capex driven business, the return ratios are a little low. They are around 11%. Cash flow wise, it's fairly doing well. Around 33% of their EBITDA in the last 5 years got converted into operating cash flow, but still the working capital is on the higher side. The promoter holding is around 60%. So if they need a lot of capital to scale their business going forward, this can further go down. Now, why did the stock give a sharp correction recently? So one reason was with the invention of DeepSeek, there was a school of thought that AI may not need that amount of data center capacity as one had initially imagined. So that was one trigger for stocks related to data center to correct a bit. On top of it, the main reason was the valuation. The valuations at one point of time of this company were absurd. The market had already discounted 4 to 5 years of growth, which are now cooling off. And the market sentiment in the last 1 year has also not been very great. Before we move forward, if you're not a part of our Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day before the market opens, I share my views on the market. I also share a lot of interesting news views so that you're able to increase your portfolio returns. More than 7,000 people are daily in touch with me on my Telegram channel, and I would love that you join it from tomorrow onwards. Let's talk about the growth plans of the company, which are very impressive. The real estate business will steadily grow. They have new projects coming up both in residential and commercial space. But the more interesting part is their data center business. The company is targeting a revenue of about 1200 crores by FY27 in their data center business specifically. And by FY32, they are expecting their revenue to cross 9,000 crores in their data center business. So this is a massive number. Right now, the capacity, as we discussed, is 28 megawatts. This will scale to 63 by FY27 and more than 300 megawatts by 2032. They will move from infrastructure as a service to platform and software as a service as they migrate to the cloud services. And recently, their second data center at Panchkula got operational with a capacity of 7 megawatts. This is the roadmap for the next 5-7 years for the company. Right now, they have 28 megawatts. This will increase to more than 300 megawatts by 2032. And location wise, Manesar has two phases, 21 megawatts and 50 megawatts. Then there's another site which is Panchkula, which will increase to almost 57 megawatts. And another 200 megawatts will come at Rai. So roughly by 2031-32, they will cross 300 megawatts in terms of capacity in data centers. And out of this 300 megawatts, 25% would be the cloud services is what the company claims. Now, if we talk in terms of megawatts, again, we will not have clarity. So I will put these things in simple numbers, just a ballpark number for your and my understanding. So let us assume that 225 megawatts by 2031 would come from co-location services. And co-location services, as we discussed, have 1 crore per megawatt per month revenue. So 225 into 1 crore per month into 12 comes to roughly 2,700 crores revenue. And the cloud services gets about 10 crores per month per megawatt is our assumption. So at 75 megawatts, which is 25% of the entire capacity, the revenue from cloud services may be around 9,000 crores. So overall, conservatively, their data center business, if all these capacities come into operation by 2031, would yield more than 10,000 crores of revenue. So this is the potential of the data center business at their peak capacity, assuming the entire capacity is utilized by 2031. Now coming to the valuations part, right now the stock trades at about price to earning of 40 times, price to book of 4 times, EV EBITDA of 32x and market cap to sales of around 8x. At one point of time, it reached as high as an EV EBITDA of 70 times. And that's what led to the sharp correction in the stock price. So as we know that the major business still more than 90% comes from the real estate, these valuations are still expensive if we look at the trailing 12 months earnings. But as the company is working into the data center industry, as they have huge capacities coming in, the market is giving them some premium over their trailing earnings. Now, what are the risks of investing in this business? Building capacities, making business plans, raising funds is on one side, but putting those capacities into operation, getting clients, utilizing their capacities is the second part. If the company is able to do that very well, only then this revenue potential will get unlocked. So execution risk is the major risk in this business. Other than that, as real estate is still more than 90% of the business, there is cyclicality element in the real estate business. It's a capital intensive business, both real estate and data center, as you have to first invest money in the data center, set it up and then rent it out. There could be different regulatory changes in real estate by the state and central government, then in data center by the government in India. That could be a potential risk. The company has majority of their business concentrated in 1 or 2 or 3 states. That could be a geographical risk. There is very tough competition in the data center business from players within the country as well as most of the multinational companies. And the clients need a very solid reason for them to move their highly secure data from a multinational company's server to Anant Raj server. They have to be upgraded with latest technology, and technology is not the core business of Anant Raj. They have a technology partnership with Orange. So that could be a potential risk. And valuations are not very cheap. This is not an undervalued stock. So there is a valuation risk attached to this company. So now that you've understood the business model of the company, the growth aspects, the valuations, the risks, what is our overall view on the company? So if you're holding this stock for a very long time and you have not sold it at the top, you should continue to hold, because as of now, the stock in the short term at least has made its bottom and in a consolidation phase. And if this level of growth and this kind of results keep coming, there is a possibility that stock may continue its upside journey going forward. But if you are a new investor who's considering this stock for a fresh investment, you have to decide what kind of an investor you are. If you're a pure value buying investor, this stock is not cheap from a valuations perspective. But if you're a high growth, high risk kind of an investor who looks at earnings from a 3 to 5 years perspective, who is willing to wait if the stock consolidates for the next couple of years in the same range, who is willing to put a stop loss and exit if the company's revenue and profits decline contrary to the assumptions that we are taking that it will go up. If you are this kind of an investor, only then investing in the stock suits you at the current price. So that's about Anant Raj Limited. I hope you like the video. I have tried to simplify this complex business and make it very easy to understand and try to put them in numbers for your easy understanding. If you like the analysis, hit the like button and subscribe to the channel, and do share this video with your friends if you like the efforts behind explaining this business. If you want me to make videos on your favorite companies, do mention the names in the comment section. Do join our Telegram channel. Thank you for watching and have a wonderful day.